Assalamualaikum, my name is Hasniza binti Haris.
Assalamualaikum, my name is Siti Mashitah binti Abdul Razak.
Assalamualaikum, my name is Nur Naswa Najwa binti Jamaluddin.
Assalamualaikum, my name is Nur Nazira binti Mansur.
Assalamualaikum, my name is Nur Alifa Iliana binti Nasruddin and my matric number is 2019266368.
Assalamualaikum warahmatullahi wabarakatuh and hi, my name is Muhammad Hafizun Alim bin Yusizat. My matrix number 2019214738. Islam is a complete way of a life that does not separate belief and daily activities, including any involvement in economic activities. In fact, Islam highly honors trending, and Muslims are encouraged to participate in economic activities that do not violate the Sharia. Islamic banking has the same function like conventional banking, but Islamic banking works according to the rule of the Sharia that known as Fiqh al-Muamalat, which is Islamic rules on transaction. According to Bernardo Vizcaíno, through his article, Islamic Finance Organization teamed up to streamline rulemaking. The Bahrain-based Accounting and Auditing Organization for Islamic Financial Institution (AAOIFI) and the Malaysian-based Islamic Financial Service Board (IFSB) are the top two organizations that set the rules for the Islamic finance. Both organizations has entered into a very important agreement in 2018 to work together to develop and revive some of their guidelines aiming to hasten standardization in the industry with 2 trillion industry. Despite the growing and increasing of interest in Islamic banking and finance industry, it faces some issue in order to cope with the evolving global banking environment. Identifying this issue may assist in consolidating and strengthening Islamic banking in the long run. Due to non-standardized terminology for Islamic financing product, it creates confusion among the bankers and also the customer. First issue, no universally followed terminology for Islamic financing. No set of rules or regulation was enacted specifically on the terminology in Islamic financing. Due to the existence of different mazhab around the world, the interpretation for the certain words might be different. For example, majority of Islamic banks offer murabaha, which stands for the financing via a sale on deferred payment. However, some banks label it as by tamim bil ajil, which is interesting that this latter institution also offer murabaha financing products. Second issue is selective interpretation of Arabic terms create confusion among the bank clients and the public. For example, Bank Muamalat Malaysia offer various Islamic financial instruments to their clients. One of it is Muamalat al-Istisna financing. This financing is based on the contract of the Bay al-Istisna. Bay al-Istisna refers to a sale by order of good or property which is to be contracted or manufactured and delivered at a specified future date. However, it differs from the Ijarah in that the raw material of the subject matter are provided by the manufacturing. If the banker did not explain thoroughly on the difference between these two, the client might get confused with the instrument offered. So, the solution for this issue, first, improve service quality. Most of Islamic banking customers find that employees and the staff are lack of knowledge in Islamic banking products since they cannot react and convincingly to customer questions related to the products. Hence, bank need to provide a practical or training to give a frontline manager a wide knowledge in Islamic banking. Sales training is important for bank to deliver a good service to customer. Therefore, customer will have a deep understanding in product offered by bank and a good experience with Islamic bank since they have a get customer trust. Second, the authorities needs to play the role. Organizations such as AAOIFI or IFSB may team up and enact rules and regulation regarding the vocabulary and terminology in Islamic financing. An agreement enactment may solve this issue thoroughly. Thus, standardization in every possible aspect is necessary to make sure that there is no confusion among the bank clients and public on Islamic banking. It also helps to avoid any conflicts between Islamic banks around the world in offering Islamic financial instruments, as there is a set of standards that needs to be followed.
Next, in standardization, there also have modus operandi of financial instruments and documentation. It is difficult to think of a standard format of documentation for all Islamic banking and financial institutions as a substitute for a given Islamic financial instrument. This is because daily practices or modus operandi of implementation may vary from institution to institution. As we know, the way of operating financial institution with Islamic banking is different, especially in handling finance. For example, Islamic banking complies with Sharia, while financial institutions are non-Sharia compliant. Moreover, practical needs may not always be the same, where opportunities for financial innovation, whether in the form of new or hybrid products, will always be open. Nevertheless, there needs to be some measure of standardization in financial instruments for rapid migration to the Islamic financial system in the Islamic world. However, Islamic finance faces a wider range of legal challenges than the conventional financial industry. The legal documents and conditions that cover them are usually standardized in the conventional market because they have been the subject of extensive interpretive litigation for many years. Therefore, Malaysia has spread two acts so that the modus operandi of financial instruments and documentation can be managed according to their format in bank management. So, among the improvements that have been made are, as in Malaysia, has the Islamic Banking Act 1983 and the Banking and Financial Institution Act 1999, which is the first legislation that creates a financial services framework for the industry. However, the Act has now been replaced by the Islamic Financial Services Act 2013 and the Financial Services Act 2030. Malaysia is the most standardized Islamic financial jurisdiction in the world. Malaysia provides a remarkable example of how states respond to these factors as part of a strategy to develop a specific legal and regulatory system for Islamic and conventional finance. The state has created its own Malaysian version of Islamic financial law, which reflects Malaysian complex legal environment and global financial market demands.
Next, for the improvement that can be made is to ensure that all financial institutions in Malaysia have two concepts of banking, which is accordance with Sharia and conventional standards. And in its management, Sharia must refer to the Sharia Advisory Council. In addition, superiors can make a new legal provision which prescribes the documentation format or management style of each type of banking. As we know, to standardize Islamic banks and financial institutions is a bit difficult. So the authorities can form two different acts like the ones that already exist in Malaysia, which is IFA and IFSA.
So here we can see the difference in the way banks are managed in the past and now, where before this standardization a bank only focused on the conventional concept of banking, but nowadays two concepts of banking already exist in one banking institution, which is the concept of Islamic and conventional banking.
I will explain about the pricing formula for Islamic financial products. So, any financing operation by an Islamic bank will involve a combination of interests of the bank principal, the bank staff, and the fund seekers. These concerns are addressed mainly through pricing such as total financing, fee commissions of the financial products. Of course, security for financing also methods by based on Islamic principle, it is not compulsory. Standard pricing formula together with the Sharia principle are needed for those on the front desk for efficient working of the Islamic financial model. Their development will also help the promotion of Islamic financing in academic and professional circles. Other than that, several different pricing approaches for Islamic banking products have emerged in recent years, including cost plus pricing, cost leadership model, credit scoring systems, and risk-based pricing, and also company profitability analysis. Many Islamic banking products are now priced directly off money market interest rates, such as the current interbank fund rate, with teen profit margin reflecting strong competitions. Besides, the Islamic Financial Services Act 2013 established the legal basis of a comprehensive regulatory framework for Malaysia's Islamic finance industry. The creation of Sharia and operational standards for significant Sharia contract is a key emphasis of this framework. The guidelines define the underlying Sharia principles and provide recommendations on the best practice and effective contract governance. These standards are intended to promote transparency and consistency in Sharia contract application in order to increase certainty and strengthen the Sharia compliance by Islamic financial institutions, as well as to serve as a key reference to spark greater mutual respect for Sharia opinions across jurisdictions. So nowadays it's better because of the technology and the standards that have in Islamic finance industry. So that's all for the pricing formula for financial products.
Public awareness. So what is the issue or problem about public awareness? When we talk about Islamic banking, some of people will directly know about the Islamic banking concept, and unfortunately, some of people also have zero knowledge about Islamic banking than commercial banking. So according to Thomson Reuters 2018, in comparison to the overall system, which is dominated by the convenience system, the amount of IB accepted worldwide is the lowest. For example, Islamic banking has global asset of nearly $1.7 trillion, yet it only accounts for 1.4% of overall banking asset globally. Furthermore, just 69 countries have implemented an IB system, implying that many more countries, specifically those with a large Muslim minority, have yet to do so. So as we can see, the issue about public awareness of Islamic banking can be overcome because the Islamic product concept is actually practicable. Not only that, the Islamic product, but years by year also have more hybrid financing and related to be more versatile and efficient. So what improvements have been made to overcome this issue? To overcome the public awareness about Islamic banking, many parties must take part and have applied some ways that can make Islamic banking grow and known by public. First is by UNDP, which is United Nations Development Program. UNDP is already having a good relationship and engaged country on the Islamic finance in innovative ways. UNDP was getting engaged over 170 countries and over 50 years. Some of their goals is to work with Islamic finance for global goals. Secondly, Malaysian banking sector also participate to promote Islamic banking to gain public awareness. Even though face economic challenge from the coronavirus pandemic, today's Malaysia Islamic banking still expand amid because of household financing and banks that promote Islamic product as a part of Islamic first strategy. Because of that, Malaysia be the largest Islamic banking sukuk and takaful market in Asia. In addition, some parties such as Center of Islamic Banking and Economists are also participated to promote Islamic banking. They had conduct national and international awareness roadshow. The reason and purpose of had the roadshow is to promote awareness of Islamic banking and finance a modern message through the seminar during this roadshow. They have successfully organized 2 roadshows that have 300 seminar and discussion. The participants of this roadshow are among entrepreneurs, bankers, trade association and university students. So what improvement can be made other than I mentioned earlier? So first, every country can include Islamic banking, Islamic basic terms, concept and modes of financing in school curriculum. Today, everything is about technology. So it's very important to promote Islamic banking in all platforms such as advertising in television and social media to gain public awareness about the advantages of Islamic banking. So here is a differentiation condition before and now. Public awareness. Before this, people do not have knowledge about Islamic banking terms, product and concept because lack of education. Right now, some people know knowledge and are already interested in Islamic banking because Islamic banking awareness become increased. Second is education. Before this, people lack of education in school or universities. Right now, all universities now actually will offer Islamic banking course for students to be part of Islamic banking sector in the future.
When examining the existing interactions between SMEs and Islamic banks, financing gaps may be identified, commonly known as the grey zone. The grey zone is a huge gap or separation between the Islamic banking sector and the SME sector. Furthermore, these characteristics cause them to make decisions based on insufficient information and generate incorrect perception of the events witnessed. After all, Islamic banks are responsible for several features that contribute to the grey zone. One of its features is that most Islamic banks have fewer branches, which is not enough to serve all SMEs in a particular region. Majority of Islamic banking branches are small and may be difficult to find, and also their existence is frequently contingent on local demand. On the other hand, the SME sector is also responsible for the existence of the gap which is created between the SMEs and the Islamic banks. From the standpoint of SMEs, there are various characteristics that are said to have aided the presence of a financial gap in their market. One of them is that most small businesses have little expertise with Islamic banking and financial products. Besides, they also have a poor awareness of Islamic banking's operations, the products and services available to them, and the Sharia laws enforced by Islamic banks. In Saudi Arabia, most of the entrepreneurs in SMEs are still not in favor of Islamic finance environment despite the development and recent growth of new Islamic financing products. The issue stems from a lack of Islamic financing infrastructure in terms of trade, development, and capacities. According to a study on Islamic financing conducted in Sudan, there exist biases in favor of SMEs that are smaller, have fewer assets, revenue, and talent. The measurement of policy reform should take place to offset bias and increase SMEs' facilities and access to Islamic finance. However, according to Bank Negara Malaysia (BNM), SMEs in Malaysia have a misperception of Islamic finance options. As a result, when there is a lack of clear information and understanding among SMEs, Islamic financial institution access to funding for SMEs becomes complex. Some of them are still under the impression that Islamic financing is just for Muslims. Because of the conflicting information circulated among SMEs, Islamic financial institution awareness and financing facilities for Muslims and non-Muslims have declined. Islamic banking is a standard but new knowledge for prospective customers, and information about it must be presented accurately, particularly in terms of product offerings and eligibility. Information sharing mechanisms should be established and improved by Islamic financial institutions in order to ensure the targeted person or customers can reach the information created. Every Islamic institution must hire Sharia specialists, provide proper training for performing Islamic finance-related duties, and have a solid Sharia foundation. In addition, study tours and on-the-job training can be valuable instruments for improving human resource practice in the Islamic financial sector. Human resources are still an issue in even more established markets like Dubai. As a result, this problem must be addressed by recommending appropriately skilled workers in the industry and providing globally recognized qualification to train qualified human beings to understand Sharia compliance requirements and deal with the challenges of Islamic commercial law.
Next, in Islamic banking, we also have an issue in training of banking professionals. One of the most significant obstacles to the advancement of Islamic banking is the issue of banking professional training, especially the lack of trained staff. Islamic banking pioneers created their own financial tools and properly trained their employees. However, Malaysia now relies on the Islamic Banking and Finance Institute Malaysia (IBFM) to meet the staffing demands of existing and future Islamic banks due to a lack of training institutes. Lack of agreement on the form and content of Islamic financial instruments, as well as the lack of Islamic reporting and accounting methods are the example. There has been some progress, however, much more is required, particularly in the fundamentals. Nevertheless, there is enough information to offer short Islamic banking training courses. It is important to remember that in the Islamic context, bank employees will require a distinct orientation. Currently, financial institutions are primarily concerned with the secure recovery of their principal as well as the return on their investment. This is accomplished through evaluation criteria for processing financial requests and security clauses in client agreements. However, the aforementioned objectives and procedures have resulted in a distinct mentality and business culture in the financial world. At the branch level, bank employees typically take a passive role. They entertain requests for financing rather than going out and seeking investment avenues. As far as we can understand, the root cause of this situation is the dichotomy between the financing instrument being loan-based. The improvement that have been made is, first and foremost, is giving lecture to students about Islamic banking. Lectures are typically despised and mocked, although they are one of the most widely used training methods. Yes, there is frequently a lack of interaction, but with the proper speaker and short lectures, this can be overcome and optimal learning can be achieved. Next is internship. It will be beneficial for both parties. Employers can profit from employee assistance while employees can gain from employer direction and training. Even so, this can be unpleasant or uneven in some cases. This is a good training strategy in situations and locations where the learners have some prior knowledge and the employers are supportive and understanding. Furthermore, employee engagement and interest are increased by a job shadowing. Trainees get the opportunity to see their job from a different perspective, which is ideal for individuals who are up to promotion or a role change. Now, what are the improvements that can be made? Some of initiatives that can be taken include creating a career path for employees in international Islamic financial services, as well as providing a clear and transparent process of performance evaluation for Islamic financial services personnel that is fair, objective, and competitive with conventional banking services operators. On top of that, staff abilities and understanding of Islamic banking and financing product may be used as criteria for advancement. This might be a significant step forward, creating a viable long-term career in the Islamic banking services sector, as well as ongoing valuable training and development courses that are not only aimed at new participants but also present employees in the industry. One of the differences in current situation between then and now is, from what we can see, student and society had limited exposure to Islamic banking in the past because institutions did not offer Islamic banking courses. However, several institutions now have given Islamic banking courses so that students can gain a better understanding of how Islamic banking works.
In conclusion, Islamic banking industry faces a few challenges and issues in industry. Nevertheless, it is significant to overcome this issue for Islamic bank to remain alive in industry. The previous discussion suggests that separate Islamic accounting standard is not crucially needed to the regulation the Islamic financial institution environment. Instead, it needs an urgent solution which is standard on disclosed to expand the Islamic contracts and instruments in order to convince the Muslim society that they are actually offering Sharia compliance products approved by the Sharia Advisor Council (CAC). To overcome the challenges integrated with Islamic banking in global market, the global financing community needs to further several initiatives.